Hello, traders. I just want to go over Friday's price action real quickly. On NFP days, um, things can get a little wild and crazy. We had 1 minute candles that were 30, 40, 50 points. I think our biggest one was close to 100 points. Let's see. I got to get the 1 minute time frame. The largest candle of the day. Let's see. I got to zoom in before I can use that tool. I think it's this green one right here. A 1 minute candle right there with wick and all. I think it's 62 points. Let's see. From there to there. Yeah, 62.25 points. That was our longest candle of the day. But saw a ton of 30-point candles. And when I'm in a 25-point stop loss, the last thing I want to see is a 30-point candle because it can just whip you out in the blink of an eye. On NFP day, we did get a signal. It was prior to 9 o'clock, which I don't like to trade that much before 9 o'clock, or it may have been right at 9. Yeah, it was right at 9. And something I noticed this week, let me give you the zoom out version real quickly. We opened with a gap up. There is a 70% chance that the market will fill the gap at least to the halfway point in the first 30 minutes. If it doesn't do that, if it only fills it to 25% or even less, that means we're bullish. So from that first 30 minutes, which is this candle and that candle, you can frame, okay, we're looking bullish for the day. And so we come down, we take out that low, we make a lower low, and then we make a higher low. When you see that, go to a smaller time frame and start looking for a breaker. We got to go all the way over here. Okay, so, and we did have one. But something I've been seeing all week, I've been demanding, so I won't lose a nickel, that the price return to my breaker line, which is right here. And this week it has not been doing that. All the weeks prior, it has been doing that. So I've been like, I don't know. But one thing ICT was talking about, and I missed some really good trades this week, waiting for it to return to the breaker, and it didn't. But one of the videos I watched, he said the same thing. He lost a bunch of great opportunities because he was demanding that the price return to the midpoint of the fair value gap. This is our fair value gap right here. It actually is a little lower. Right there from that wick, and you have to include the volume imbalance, but in this case, there's no wick, so it just worked perfectly. So what he started recommending, this is the top of the fair value gap of 104.75. Put your entry order one tick above. So right there, you'd right-click your mouse. Uh-oh, it's too close to it. Right-click your mouse. Uh-oh, let's go over here. It's right there. Right-click. Uh-oh. I'm going to have to move it down so I get a little higher. And then you would do a buy order of however many contracts you want, one tick above the high of that fair value gap, because sometimes it won't even dip into it. What I've been telling you to do, because of the way the market's been behaving, is wait till it gets down here, because you have to put your stop below this candle, and I like to put it below the breaker all the way down here, and that's 48 points. That's 100. If I entered there, $100 on one micro. Wow, that's 40. It might as well be 50 points. So that's pretty big. That's $100 on one micro. If you were doing 5 of them, that's $500 stop loss. So that's a little bit too much for me. But so what I would do in this case would just be, I would have to put my stop at the bottom of the fair value gap, which that's 21, 25 would get us to about right here. That's only $50 on one micro. So you could do 2 or 3 and still not be in a position where you're going to blow up your account if your stop gets hit. But prior to this week, I've seen it return to the breaker. This week, I have not seen it return to the breaker, and I missed a lot of trades because I was wanting it to come down there. So maybe employ this. If you get burnt, it does come down to the breaker, maybe the center of the breaker. Don't get scared off the trade. Just wait for a better opportunity and jump back in. But I've seen this almost every day this week. So employ that. And then where was I aiming? I got the daily chart, fair value gap, way up here. From that wick to that wick. And so I was thinking we would trade to the midpoint of that fair value gap. And that's where I aimed. And it worked out. It worked out all right. Good hypo for the day. What I wanted to address was ranges. We pretty much ranged the majority of the day. Like this one here, we stayed in this for an hour, over an hour, hour and a half. And then we just moved up and we got into another range from 12.15 all the way to 2:45. So we were just ranging. On NFP days where we're just seem to be chopping and chopping, it's highly beneficial to pull up a higher time frame chart. This is a breaker I had marked out, and you see how those wicks keep on wicking into it. That's definitely a go short spot, but it's just half the range. So I'm going to get rid of those. The way you would trade these ranges is you just fade the extremes. So this is obviously, I would say, the bottom of the range and the top. Once we've already taken this objective, I'd be looking for shorts. So I would be putting a limit order. You click right above it, put your limit order. You can do it. If it's on one of those, it won't let you. It'll just say, it'll say one of those. So you have to click on an empty part of the chart, put in your limit order, however many you want to go short, and then move it down where you want it. So in this case, it would have taken it out, and then you could aim for the bottom of the range right there. What kind of point value are we looking at there? Well, that is 71 points, so that's $140 on one micro. Not bad money, one micro. What if we aim for more micros? What if we did 5? Now we're talking $700, right? Yeah, $700. What if we took some off there and took some more profit here? Even better. What if we aim for 50? We wouldn't have hit it. But yeah, so ranges on days like NFP days, you zoom out, look at your 15-minute chart, and make sure you're not in a range and getting your butt handed to you, trying to have a breaker run away with the day. Because typically on days where you've seen a lot of movement like that, like this one, boom, Friday will range. It's a big movement. Range day mostly. Big movement, range. Then the next day, big movement. It's a range day, but it did have some big movement. And then here, range all day. We didn't come down to the lows, though. So it technically would be an up day. So that's all I have for you today. Zoom out, check these ranges. Don't let it clean your account out thinking that we're going to run 100, 200, 300 points on a Friday. Sometimes it will do that on NFP. But this entire range was 250, and if you didn't get in down here, you were struggling. I think it was a 248 point day, which is a lot less than what we've been seeing. Like this day here is from the top here all the way down. Look at that. It's not that much more, but it looks like a lot more. 369. So yeah, about 100 points more on that daily range. And then this one, mucho more. From here all the way to there, 700 points. So yeah, I would say NFP day was kind of a yawner. This is more like an NFP day here. But looking at that 15-minute chart, we did fall into some ranges. And look at that. What if we would have faded the extreme here? Like we come down, and then we say, okay, I'm going to put in a limit order right there to go long, based on nothing more than we'd appear to be in a range. I'm going to go long right there. And if I'm wrong, I'm wrong. And then we aim for the high of the range, which would be either these wicks or that wick. We've been doing all right. What if you had something up here like an NWOG you could aim at? We know we're at this end dog. What if we had an NWOG we could rate, or 50% of the weekly range we could aim at? That wasn't on the chart when this happened. But just those wicks. We got in right there at that wick, and we went to those wicks right there. 122 points. One micro paid you 244, actually 45 because it's 50. $245 on one micro. Man, what if you did 5? Just saying. What if you did 10? That's $2,450. Of course, you'd have to have a really big stop loss to do 10. So I don't recommend that unless you have a lot of money in your account. A lot of cushion. Because if you're wrong, now you're in trouble. I'm going to call it. I hope you can use this information in conjunction with the breakers to, I bet if we zoomed in on that area, we see a reversal pattern. Low, higher low. Looks like we pushed away with a fair value gap. See what time that is. That's the 28th at 1:15. I bet you 1:30 we made a breaker and came back to it. You want to take a peek? We'll just, for that one, the 28th at 1:30. There we go. That's the 30th. 28th right there. This is the one we're talking about. I wonder if there was a breaker there that we could have taken a trade off of. Okay, so we got run on liquidities here. Our last up close candle prior to the run on liquidity is this little skinny one right there. We'll just mark the top so that for speed wise. And we're going to turn it our mauve color. Well, I'll be dadgone. Look at that. So you can spot these things on the 15-minute chart. We had a low. We had a higher low. We pushed through. Is that a fair value gap right there? It is. We pushed through with a fair value gap. Let's say we put our limit order one tick above, right there. Stop goes below it. You could even put it below the breaker if you wanted to. And look at that. Not to the tick, unless my line's just a little bit off. I've been seeing that all week. We're wicking into this, but not quite going to the breaker. So instead of putting your limit order on the breaker, put your limit order right here, one tick above the high of the candle, the high of the fair value gap. So this bottom of the low of this candle is 19,296.50. So you'd put it at 19,296.75 right there. And then, of course, you'd get filled. And you can aim, I believe this area right here was the, that's the end dog. We're a long way off. That's the top of the end dog. So this would have been those two little wicks we were seeing. But you could have aimed all the way up into here. I think I did do that. If I'm not mistaken, I did take that trade. That's a nice little setup right there, though. Okay, I'm done. 15-minute chart until you see something like that. And then do the switcheroo. See how this one looks different than that one? We made a lower low. We would have to have a higher low before we could get in on that. But anytime you see a reversal, get in there and look for those 1 minute things. Anytime at all. Any reversal. Like this one here, we went down and then we started going back up, and there was probably a gap. Yeah, we opened with a gap and it filled it immediately. But here we came down, we took out these lows on this one on the 15-minute chart, and then we went back up. I bet you there's a reversal pattern right in that area. Lower, higher low, and off we go. I would say that would be some good chart homework for you to look into. Okay, I've got to call it. I got to go do some things. I can't just sit around here looking at my computer screen all day. So remember to be kind to yourself and be kind to one another. I love each and every one of you. If you have any questions, please put them in the comments. Remember to like, subscribe, all that good stuff. Tell your friends about it. And we'll talk to you next time.